So we've had a horrible stock market in 2022, and last week that continued with this UK stock. It took a massive beating, and we're going to talk about this one, and it was Cakebox, and Cakebox shares crashed 50% last week after a profit warning. And this is the first bit of weakness this business has had, and the first bit of weakness after such an amazing period of few years, and we have a first bit of weakness, and that sent the share price sinking down 50%, and this was a massive drop off, and this actually pushed it now below CV levels. And I'm going back to a comment that I saw in one of my videos about 2 videos ago, I think it was. Someone put in that video saying, like, we are at the moment going through an opportunity of a lifetime. We were talking about, the CV times, and the CV times created such an amazing opportunity in the stock market where you had stocks at such good valuations, and if you bought in that dip, it had the rewards. And who would have thought 2 years later we would have the same sort of situation appear right now? And Cakebox, a company that has been performing absolutely amazing. You look at the financial performance of the business, the balance sheet, the dividend that it pays out, and you're getting ridiculous sell-offs in these sort of companies right now. And that's what we're going to talk about today after this business had that 50% drop. So Cakebox in November 2021 was actually peaking around £4 a share. Now it's currently £1.45. And after the trading update, or the profit warning that came out last week, this stock actually fell, as you can see here, to a 52-week low of 92p, which actually pushed it way below the CV levels, the peak CV times. Now, if we actually do look at that time period, we had the drop that opened up, but as it dropped 50% on the open, buyers did eventually come in as the day went on and on to the next couple of days. So even though we dropped all the way down to 92p, there was a big surge of 44%. So if you did buy in that dip, you were very quickly rewarded. And this was a massive overreaction with this business to lose 50% after this profit warning. But it did see the buyers start coming back in, which should have happened because this sell-off was absolutely ridiculous with this business. But even at £1.45, we're talking about a business that is near enough near the CV levels, which is just insane. And it does trade at 9 times earnings. Now, this business definitely doesn't deserve to be at 9 times earnings. Now, you also do have to factor in that the profit is probably going to shrink in this next trading year, so it will trade at a little bit of a higher P ratio, but that P ratio is probably going to be somewhere around the range of 13 to 14 if we work on future numbers. And it currently does pay a 5.24% dividend, which is a really high yield. In fact, I just got my dividend from Cakebox the other day, which was really nice. It is questionable whether or not that dividend stays around that high yield, because obviously if the profit drops, are they going to start pulling that dividend back slightly? But even then, if it does have a bit of a smaller payment, it's still going to hold at least a 3% yield, potentially up to a 4% dividend yield. And like I was saying at the intro, is like, this business has been performing amazing. Like, there's no other way to put it. The revenue growth was 50% year over year. The gross profit was 45% year over year. And whether you look at the cash on the balance sheet, the dividend, absolutely all performing amazing. And already before we had this drop in the share price was already down a huge amount before this actual drop. So this is the thing, is like, we're talking about a business here that already priced in negativity and then went even lower, which is just insane. And when you look at this business here from the past performance, look at the profit and revenue growth of this business. It's such a high quality business. The revenue growth has been absolutely fantastic, as you can see here, especially over the last year in particular. And the profit as well has been insane as those profit margins grow. And like we said, we'll look back at the share price once again, and the stock is valued basically, the levels it were at pre-CV, or when it came onto the stock market in 2018, which is just insane. And like we were saying, it has a history of paying a really nice strong dividend as well. When you look at the balance sheet, fantastic healthy balance sheet. It only sits on 1 million in debt with 8% debt to equity, and it sits on 6 million in cash as well. And this business as well has fantastic profit margins, as you can see here, 19% profit margins, and it has 6 million in profit, which is just insane amounts of profit this business generates and pays back to shareholders. So fantastic performing business here. Now, in the outlook of the recent quarter, we did say that there was some weakness here, but it still seems pretty strong, even though in an increasingly challenging environment. Now, they did come out with a profit warning a few days ago, which basically said that since they did that update, or the full financial years, unfortunately it has got significantly more challenging, with inflationary cost pressures across the group have increased and the full year gross margins will be impacted. They also said that in the months of July and August there was weaker like-for-like sales, declining 2.8%. They believe that was due to the impact and footfall due to the heat wave, which I can actually see because during that period of time when we had that heat wave, there was a lot less footfall around a lot of stores. I was personally going to some store locations and they were, when you were going to the car parks, they were empty. So I can understand why that is weaker, but even then, that's like-for-like sales. So you're not factoring the future launches of them franchise stores. So potentially the revenue could still be okay. But they did say they expect the group now to have full year profitability to be significantly below current market forecasts. So really, we shouldn't see a massive decline in revenue, which is still insanely up, year over year. So that is absolutely fine there. Obviously, the profitability, gross margins, we don't know how much they're going to be impacted by because they haven't actually announced it in that trading update. But you can see here, they still should make good amounts of profit here from what you can see. But one of the great things that came out is that there was actually a big, massive buy in the insiders. So that's what you want to see, is when you have a share price dump like this, what gives you so much more confidence is if a shareholder or one of the insiders come and buys a chunk of the business. And you'll be able to see from this post here, Sukh Shamdel actually picked up a major amount of shares here. He bought them at £1.21, which is a little bit lower when the share price was after the close on Friday, but he picked up 225,000 shares. Now already it's a founder-led company and he obviously owns a big stake of the business. He owns 25% of the business, but he also committing over £225,000 worth of shares is a massive boost in confidence, which is what you want to see. So overall, this business has performed absolutely amazing in the last few years. Good amounts of revenue, good amounts of profit. It is going through a tough time, which is understandable with the environment that we have in the UK right now. But this is a high quality business that got sold off massively, a massive overreaction. As you can see, the share price already recovering here. And the big question here is, where is the business going to stabilize? Obviously, we're going to see a drop in that profit margin. Obviously, previously it was holding up towards that 19% range. I think it's going to drop somewhere between this 10 to 15%. Which is still absolutely amazing, still a very healthy business, still a good amount of profit, still going to pay a good dividend. When you factor in that profit, that there could potentially have the business still having major upsides. For me personally, I still think that this business, if it does this sort of profit margin, should be valued somewhere between £2 to £3. So that is key to keep an eye on. I've actually emailed the investor relations team at Cakebox to kind of get concrete numbers, what the gross margin and profit margin will be now. So I will see what they respond to that. If I do get an update from them, I will be posting that on the Discord. So keep an eye out if you're on the Discord and I'll confirm that with you guys. But even if this profit is now going to drop, the revenue is going to be a bit flat for the next kind of period of time. This business is still massively undervalued and should be a £2 to £3 stock. And also having that insider buy-in obviously gives you a massive amounts of confidence. So overall for me, I see this business having the first bit of weakness it's ever had. The share price is already, impacted by that at crazy low valuations. So for me, did I buy this opportunity while it was on this dip last week? I did buy some shares in Cakebox on this dip because I thought it was an absolute ridiculous dip, massive overreaction. And I still think right now Cakebox has crazy amounts of upside. Obviously, if you bought at 90p, you got an absolute bargain there. But even now, I still think this company should be a lot highly valued where it should be because it's such a high quality business. So a little bit of update on Cakebox after their trading update or the profit warning, which obviously is not great. However, when you look at what's valued at now, what's going on in the world, how many other companies are being impacted by this, and you're looking what it's valued at, I think it's a great opportunity. So yeah, that's Cakebox today, guys. Hope you enjoyed it. Hit that like button if you're new, subscribe, and I'll see you next video.